Be Wealthy and Smart, episode 769.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the unprecedented economic recovery that's happening, because this is surprising a lot of people, and there's so much confusion out there, as we talked about on last time's podcast, where I made the bull and bear case for the stock market. There's a lot of people that see the bear case, meaning they're not very positive about the market going forward, and they haven't been all year. And we're going to talk about one person specifically who's gotten himself into trouble by thinking that way. And then there's people like us that have been positive on the stock market, and since the lows have said the market would go higher and would make all-time highs. And here we are. So where do we go from here? And what else do I have to add to last time's podcast? That's what we're going to talk about today. But before we do, I want to, first of all, thank everybody who left a review. We did have the announcement of the 25 winners on the last podcast. So if you missed that, go back and listen to Monday's podcast on the case for the bull and bear market, and you'll hear all the winners. It's also listed in the show notes, so you can look for your name in the show notes as well. I also wanted to say, yes, we do have a new podcast cover. I finally got around to changing the podcast cover. I changed it from gray to gold when I wanted to make the statement that I was getting very bullish on gold. And I still had an old photo that I was using. And in February, before COVID really started spiking, I was able to have a photo session outside with a photographer whom I love, Natalie, and we were able to get some fresh photos. So I finally put together a new podcast cover. So look for it. It's white and gold and has an updated photo of me, and I hope you really like it. It feels good to have something fresh and new and yet still have plenty of gold around the borders so that I'm still making my subtle statement that I'm bullish on precious metals. And speaking of precious metals, our silver is still doing extremely well, up 58% now year to date, versus gold up 27%. I like gold too, but I think the opportunity for outperformance is better with silver. As you can see, more than twice the performance of gold, so we will stick with silver. And our mining stocks, GDX and GDXJ, up 42% and 41% year to date, handily outperforming the NASDAQ index, up 33% year to date, and the S&P 500 now up 9% year to date. But in August alone, we had the best performance of any August in 36 years. Yes, the last time August was up 7% was in 1984. So you had to be in, you had to be invested, and you had to be pretty bullish in order to get August's return. Unfortunately, not everybody has been bullish, and some of the very best professionals who are the highest paid money managers, these are hedge fund managers that can make hundreds of millions of dollars in 1 year. In some cases, they make $1 billion in 1 year, based on getting a percentage of their performance. However, one manager who's been a top performer in the past and at one time was matching Warren Buffett's record of compounding for 26% a year for a decade, has really stumbled this year and had a really tough August. In fact, his hedge fund was up 0.5%, not even a percent, during that 7% rise. So he missed out on 6.5% of performance percentage right there just in August. And who am I talking about? I'm talking about Dave Einhorn from Greenlight Capital. Greenlight Capital has been a top performer for years, has had a few rough years recently, but it's not just him that's having a rough year. The HFRX Global Hedge Fund Index rose only about 1.4% in August, bringing year-to-date returns for the average of hedge funds to 1.7% this year versus 9% for the S&P 500. I find that really interesting, and it's not to give myself a pat on the back, but it's to show you that even top talent in the industry, and that's what hedge fund managers are, they are the top talent because the reason that they are at a hedge fund is because they can make a lot more money as a hedge fund manager than they could as a mutual fund manager or any other money manager. So hedge funds are the creme de la creme where the top talent migrates because they can, and they usually have great performance and therefore can get paid very handsomely for it. But when they don't outperform the indexes, they suffer badly and people move their money out of their accounts. So they can suffer hemorrhaging of assets, and it can even cause their funds to close down. We've seen that recently where hedge funds have started to close down because they've had difficulty keeping up with this market. And we understand how it can be confusing. On the last podcast I laid out the bear case, how this market has gotten so narrow with high PE ratios and where the economy isn't really fully open and not all businesses are back to work, where we have 1 million new unemployed people, where the Fed is now going to accept more inflation, and where 37% of homeowners are in forbearance. But then again, we have the bull case, which is that the market is rotating into the undervalued assets that haven't been performing as well. We have momentum driving us to new highs. We have unprecedented stimulus, which is really the most important thing. All that money sloshing around that I talked about last March, well, that's what's causing a lot of this market momentum. $8 trillion so far. And I hear next week another stimulus plan will be proposed. So that's up on deck, and I do think they will pass something. We have the dollar heading lower, which tends to boost the market and bring in international money. We have an election year, which is also one of the most important factors about this year. And of course, the election cycle that goes right along with that. So we have the bear case, we have the bull case. Fortunately, we've been on the bullish side, and unfortunately, some of the hedge fund managers have been on the bearish side. So I'm very happy to have steered you correctly during this very difficult time. Part of, I think, what is difficult for hedge fund managers is there's really no precedent for what we've gone through this year. 2020, as we all know, is a very unique year, and things have happened this year that we've never seen before. And because of that, the only thing we have that's in a coincidental situation is the pandemic, which was here 100 years ago in 1918. And so that's not really a good indicator of how the stock market reacted or things like that. We really reacted differently than what happened in 1918. So it's hard to draw any precedent or look back in history and use that as a guide for the stock market. Basically, it was a matter of looking at all the evidence and deciding which way to go. Were we going to go with a continued bearish theme, or were we going to go with a more optimistic bullish theme? We chose the bullish theme. So far, so good. So many people are asking themselves, is this time to get in? A lot of people have missed the market lows in March. And they've seen the great performance in August, and they now want to jump in. Now after Apple has split, now after Tesla has split, now after they've gone up a lot before the split and after the split, people want to get in now. Well, I don't think this is a great time to get in. Typically, when we want to buy is when there is a pullback, and I think there's still time this year for that. So if you have new money to invest, I would say not to be investing your new money at this point. If you are still in the market, I would stay in the market. I think we do have some rough waters ahead, but we're not there yet. So stay in the market, but don't commit any new funds into the market unless you're doing a 401k type regular investment. That's fine. Do your dollar cost averaging. That's okay. But if you're looking to commit a large lump sum, this isn't the time to do it. But this is the time when a lot of people really get the itch to do it. People invest as if they're looking in the rearview mirror. They think, oh, the market's rebounded. Now we're at new highs. So now it's safe for me to get in because they're looking in the rearview mirror. They're not looking ahead. And what you have to do is actually look forward. When you drive your car, you're looking forward through the windshield. You're not looking in the rearview mirror, nor do we invest by looking in the rearview mirror. But that's what happens. That's what Wall Street trains us to do. And that's where people feel comfortable. They feel comfortable by saying, oh, well, this return has been great. The performance has been fantastic. So now I can jump in and all that bad, volatile stuff, that risky time is all behind us. And from here on, it's all smooth sailing. But that's actually not correct. The least risky time to invest is during a pullback because the market has already gone down. The most risky time to invest is when the market's gone up a lot because the market is likely to take another pause. So if you look through the windshield and you look forward, you can wait until there is another pullback. I've mentioned to you that there are several things I'm looking for to still happen this year. There's a lot of craziness, I think, yet to happen. I've mentioned I think we're going to have negative interest rates. I've mentioned I think the dollar is going to get stronger and be strong against other currencies. It's not going to get weak and go to zero, as many of the financial experts out there are saying. I totally disagree with that. The dollar is about to get stronger, and it's going to be stronger against many other currencies. It's going to be the last one standing. And finally, it will then weaken after it has outlasted every other currency. But before we see a dollar collapse, we are going to see the dollar strengthen. So we have plenty of craziness ahead. I think we have plenty of volatility ahead in the markets, both on the upside and the downside. Of course, I'm still looking for a complete debt jubilee worldwide, which I believe is the only answer to clearing all of the debt on this planet. So we'll see. In the meantime, we're still bullish. The market's still going up. Interest rates are low and near zero. The housing supply is still being held artificially low so that housing prices are going up and staying up. This is not something that we're going to see, in my opinion, next year. But for now, the housing market is supported and it's a great time to sell, but not a great time to buy. The time to buy will be in the next year or two when I think we have tremendous opportunities for that. But right now, prices are artificially high. This is a good time to sell. So I think I've covered all of our asset classes. We've talked about stocks. We've talked about precious metals. We've talked about real estate. So that's my continued update of the bull and bear case and where the market's going. I did say last time I'm expecting the S&P to get to 3,800 by year end, and I'm sticking with that. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And while you've been here with me on the podcast and you've been hearing some of my investment opinions, you can learn a lot more by reading You're Already a Wealth Heiress, Now Think and Act Like One, 6 Practical Steps to Make It a Reality Now. People often say, Linda, I listen to your podcast all the time. What more could there be in your book? And then they read my book and they say, oh my gosh, it's like the podcast on steroids. So there's a lot more information in the book than what I'm able to share with you on the show. And you get the real backbone of everything about wealth building in that book. And it's for men too. And then from there, if you're really interested in turbocharging your investment knowledge and working more closely with me and my inner investing circle and getting all of my recommendations, my asset allocation model, my timing suggestions, and predictions about each asset class on a more detailed basis. That's my VIP experience. If you're interested in learning more, just fill out the short questionnaire in the show notes and I'll set up a time for us to talk. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.